Thank you for tuning in to another edition of the Vulcan Report. This end of day report is for trading on Thursday, December the 15th, 2016. You're looking at a chart of the gold futures. As you can see, the gold futures did dive deeper below the Kumo cloud, and it's looking extremely bearish at this point from a weekly chart perspective. You can see that the shorter term trend line is crossing below the longer term trend line, which is bearish. You can see momentum pointing straight down, and we're still not into the Kumo cloud yet, but the price action is getting worse. So long liquidation happened up in here, and basically the selling pressure the bears have taken over since then. So it's been quite the roller coaster ride up in here, and then now it's finally giving way and breaking down. If you look at the daily chart, you can see a little bit different of a picture here. You can see it's basically market tried to get a nice rally going here, couldn't get the trend lines to cross, got close, but then they started to move away from each other, and you started to see the acceleration of the momentum down. And that's what you're seeing now. You're seeing a negative swing VIX, and you're seeing a well-defined bear market on the daily chart. All right, so the further these pull away from the Kumo cloud, the worse it looks. Also, here you had an extension, and then now you have a ramp pointing to an accelerated down. Chances are it will try to find a bottom somewhere in here within the next 2 to 3 weeks before correcting back up again to around the 1250 level, but it's going to hit trend line resistance right now at 1223. So again, system is still negative on the gold futures, on the metal, but long the paper. So let's take a look at what paper did today. Alright, taking a look at the JDST, you can see here this had a very nice breakout. Very nice breakout. Alright, have not filled this gap yet. So that is going to be interesting to see when that happens. Furthermore, you see that the initial thrust from here is, it's breaking away, forming a breakaway gap here. It could be nasty depending on how gold does. If gold slows down on the downside of things, then this will back and fill. If not, then we could just keep gapping up and just keep breaking away. You can have several of these breakaway gaps. You could be all the way up, $100 a share if it wants to. It just depends on how bad the gold crush gets. Technically speaking, even though we're down $200 since the election, that's nothing compared to what can happen. Remember, just like I said in the last video, if they want to bring gold down back to $250 a share, I'm sorry, I said a share, an ounce, then that's what's going to happen. As long as there is that type of momentum and selling pressure behind the move, they can crush the paper price to whatever they want. Our job is not to be married to a particular direction in the market. So if this trend is going to continue, and this shows really the beginning stages of a bull run, this could be quite the run. So again, as long as they're going to attack and raid the metals, we got to be long the paper. That's what that means. Long the paper means to buy the inverse ETFs. That's what that means. Taking a look at silver. Let's see what happened. Alright, on the daily chart with the silver, it's not as bad as gold. Silver had been the stronger of the two, but now its momentum is starting to point down as well. This is quite the move. So the next leg should be around here where we are now, between 16 and 14, and then the next leg down like you did here. You had this here, similar to this here, and then you can see how the market reacted. So this is a staircase kind of a thing here. It's bearish. There's nothing bullish on the daily chart for the silver. Taking a look at the weekly chart. Weekly chart, it's trying to follow the ramp. So we're going to see, is it going to just break through like gold did, or is it going to pop up from here and start to ramp up? It's just so tough to say. You have to trade what you see. Right now, the price action is still bullish on the silver. Long-term trend is still bullish. It has not taken out supports like gold has. We don't have price action below the Kumo cloud, and we haven't crossed on our trend lines. It's getting close, but we haven't done it yet. Momentum also is not as powerful pointing down like it is on the weekly chart for gold. So that's a good one here. Let's look at being long the paper and silver, how that's playing out. Looking at DSLV, as you can see on the weekly chart, it's just climbing. It's getting near this resistance now. It did have some problem today. It pulled back after hitting 32.49. So here we are now at 31.90. So it's gonna try to break through. We'll see what happens. Can it push into that 40 handle? That's gonna be interesting. Can it do it? Well, that's where the Kumo cloud is, and that's the weekly chart. Let's take a look at the daily chart. Breakaway gap. The prices are running away. Look at that. This is quite the gap. You closed at 28.25 and you open up here. So this is extremely powerful. At some point, though, you do need to reconcile with this incredible gap. You're going to need to correct this. And if it's going to run, it's going to run. So this is an interesting one to watch, too. Looking at DGLD, you can see that this also, gapped up today. And the trend is just like going straight up here. So this could really lift off from here and really take off. It's going to be tough to say. Tomorrow's Friday. So being that it's Take Back Friday, I do expect some pullback and profit taking. I think we're gonna back and fill in the DGLD and in the JDST. I think we're gonna see that, and also in dust. Let's pull up dust, and then next week possibly resuming the downtrend. Let's take a look here. Yep, see, here's your dust. So we're going to be watching these. We're going to watch the DGLD, the dust, and the JDST for next week. Let's take a look at how the dollar fared. Haven't seen this in years. The dollar runs all the way up to 103.53 before pulling back to 103.12. Very, very powerful here on the daily chart. Taking a look at the weekly chart, you can see it hit the new highs very nicely, and that's what we got here. So we're going to see what happens in the coming week. We just don't know. We don't know what we're going to see. This could, the way this is showing the kind of pent-up energy that's in here, this thing could continue to gap and go too. All right, let's take a look at the NASDAQ. I did warn you that you need to start looking at that NASDAQ. Here's the NASDAQ on the weekly. It's hanging in there. On the daily chart, it's doing pretty much the same thing. Here you go. Kind of flat here on the daily. It's holding its own, but it could give up the ghost at any moment. If it does, you're going to need to be long the paper. Here's SQQQ, and there you have it. So SQQQ is kind of taking a breather. It came down here and tested support, didn't take it out. So that's kind of a bullish sign, but there's nothing bullish on the chart yet. Gonna have to wait and see what happens in the stock market. Let's take a look at what's happening in the Dow. All right, it's hanging in there on a daily chart, and we're now on day 2 from that past high. And now on the weekly chart, here we are on not too far away from the highs. We're at 19,818, and we hit 19,911. So, the stock market's holding up. The dollar and the stock market are holding its own. All right, let's take a look at crude oil. Crude oil is pulling back because on the strength of the dollar. You can see that here. All right, looking at the daily chart, you can also see that a little bit better. There's a gap on the daily that the market's trying to decide how it wants to move, and it's just kind of hanging out here. All right, momentum, believe it or not, still hanging in there a little bit. We haven't taken out any supports or anything like that. If crude oil does pull back, you're going to want to take a look at, what is it? Let's see here. Let's take a look at Doug real quick. And you can see here that Doug is at, all right, it's trying to come up here towards the resistance. So this one is definitely watching right now. 39.69 up here. So if it can get up to here, then the next resistance is at 42.13 below the Kumo cloud. So we're watching it. We're going to see what happens. But I'm thinking that they want to run the oil some more to the upside. I don't know how they're going to do this without pulling back on that dollar. You can see here the oil on the daily has been pulling back. So it's interesting how things are setting up right now. It's just really, really, really interesting. We're just gonna have to watch it and just trade what the market tells us. Here we are, the last couple of weeks of the trading year. I don't see the stock market pulling back this year, and I think things are just going to kind of mellow out and be quiet a little bit, make it a little burst the last trading week of the year. We'll have to wait and see, but right now I just don't see any relief coming anytime soon. And the gold, as a matter of fact, is looking like all the signs of the beginning stages of a straight up bear market. So we're going from a bullish retracement to a possible bear market. We got to watch that. So with that said, remember, the Learning Academy is in full effect, and it is free. When you subscribe to the weekly post-wave price triggers, come on over to postwavetrading.com. You can also register on our site so that you can be kept abreast of the latest news with post-wave trading and things of that nature, special webinars that may be coming up, things like that. You can also shoot me messages that way, keep in contact with me, whatever. If you want to shoot me a line, feel free to do so. That's postwavetrading.com. Come on and learn how to hedge your portfolio, especially going into the new year. If this is going to be a bear market, then the price of the metals are going to take a hit. If that happens, that's going to affect your wealth in the short term, especially if an emergency comes up and you have need of liquidation. You don't want to take it on the chin. You want to be able to make money and thrive even as they raid the paper markets. Learn how to do that. Come on over to postwavetrading.com. Remember, bulls make money, bears make money, and pigs get slaughtered. So remember to take what you can, give nothing back, and let's keep enjoying the ride, folks. We had a wonderful day in the JDST and the DGLD. Wonderful day. Let's do this again, possibly tomorrow. Let's see what tomorrow brings. If it's Take Back Friday, so be it. If not, keep it moving. Everyone, see you in the trading room. Peace. Up in here. And basically, the selling pressure, the bears have taken over since then. So it's been quite the roller coaster ride up in here, and then now it's finally giving way and breaking down. If you look at the daily chart, you can see a little bit different of a picture here. You can see it's basically market tried to get a nice rally going here, couldn't get the trend lines to cross, got close, but then they started to move away from each other, and you started to see the acceleration of the momentum down. And that's what you're seeing now. You're seeing a negative swing VIX, and you're seeing a bear, well-defined bear. You can see that the shorter-term trend line is crossing below the longer-term trend line, which is bearish. You can see momentum pointing straight down, and we're still not into the Kumo cloud yet, but the price action is getting worse. So long liquidation happened in the market on the daily chart. All right, so the further these pull away from the Kumo cloud, the worse it looks. Also, here you had an extension, and then now you have a ramp pointing to an accelerated down. Chances are it will try to find a bottom somewhere in here within the next. Thank you for tuning in to another edition of the Vulcan Report. This end of day report is for trading on Thursday, December the 15th, 2016. You're looking at a chart of the gold futures. As you can see, the gold futures did dive deeper below the Kumo cloud, and it's looking extremely bearish at this point from a weekly chart perspective.